Hello everyone, this is Mike Hamilton from Trade the Easy Way. So thank you very much for joining me first of all. So this week we have on Wednesday we've got US inflation and Fed budget balance, and Thursday UK rates. Friday we've got UK GDP. So I'm looking at the Nasdaq on the daily chart, and this is looking like a pretty pathetic chart to me. Here we are in May, selling May and go away. Well, at the moment that looks likely. We've got all these touches of this resistance area here. So we've got a channel high up here and channel low down here. So at the moment we look as if we are potentially going to come down and touch this trend line support or channel support. So we could end up just chopping around here if we're not careful. But overall, you know, these highs are selling. The volume is just falling off. So we're still sitting in the Friday non-farm payroll range. So if we just dip back into there and hold, that's great. So if we end at some stage this week, we can find that and hold, great. Otherwise, I would just short highs at this stage. Because if you stand back from this and just look at the way this 20-day average is panning out, we are just with a slow incline. Now we're levelling out, potentially rolling over. Having said that, we are above the 20-day average. So if this is a bullish consolidation, we'll come down and find this non-farm payroll lows, hold and push back up. But at the moment, with all these touches of this resistance and the way in which this volume is falling off, I would say the path of least resistance is down. But let's get some more. Let's get a couple of days at least. Let's get Wednesday out of the way. Here we are, Tuesday the 9th, and just see if that's holding. So how does that translate into the FTSE? The FTSE is coming into this support from April 22 high. So the theory with this setup like this is if a market can punch through an area of resistance like this and hold, then this resistance becomes support. If these dips are bought and we subsequently end up above 7900, then we are going up. However, if we close underneath 7700, then this is going to decline and fall back into support. So you can see how we're sandwiched between those moving averages, which emphasises how range bound we are. But we are underneath the 20-day average. 20-day average is pointing down, so just look. I would still short the highs on this one, given that the volume's falling off and we're under the 20-day average on the FTSE. Let's see if we can continue. I will continue to try and sell the highs and see if that can get under 7700, because if we crack that, then we are lower. Dow quickly. This is more significant because we've now got a clearly identified resistance area here, and we're underneath it, underneath the 20-day average, volume falling off, same story, and the highs are definitely selling that. If we close underneath Friday's low, then we are going to come tumbling over. Very significant sell signal on the 1st of May, and here we are on the 9th, still closing lower. Gold is good. All these dips I think are still buyable. If we close higher here at 2030, then try and buy 2000, 2020, 25. That's a bit random, isn't it? Let's try and be a bit more specific. If we come down to Friday's low, which is 2000, and hold, then I think we can climb and break that high and go to 2200, 2300. Alright, so let's see where we are on any volatility tomorrow with US inflation. Dollar index surprisingly weak. They're just negotiating the debt ceiling, I think, which is unsurprising that is dragging the dollar down. If that dollar breaks lower, that could free up the indices for some higher moves. A weak dollar is generally good for the indices. Talked about gold, look at oil. So huge plunge into Wednesday 3rd. This is no man's land. So if we come down and hold 70 on volume, then I think we can get back up to 85. So this, we gapped up here on the 31st of March. This is an overshoot potentially on May 3rd. So any these at the moment, these pullbacks are buyable. Any market that can hold the previous year's low is very bullish. So I'm looking for this to be a potential double bottom and work its way up back to 85.90 plus. Let's look at a few basic stocks. Let's look at the Lloyds Bank. So far this year we've held up. So I'm long at 46p, which is where we are just about now. So if we can close above this apex, above 47, 48, I think we can potentially break up through 50 and go to 57 plus. If you look at Barclays as well, so Barclays had this decent move off of the March lows into 161, and we're now struggling. So with this big 1, 2, 3 corrective wave here, bounce back into resistance or another 3-wave move. So it's about where we go from here. Yeah, we start closing above 160 and I think we can go to £2 plus, but it's precarious. We're neutral. Decent push up on Friday 5th. Can it hold? We need to see. Right, if we look at retail, good litmus test. Boo. Went shot up to 60, now down to 42. That we're coming down on volume, so this just looks horrible. This looks as if we can come back to 32 here at the moment. So you can see back here on 31st of March we just ran into November 22 highs. And if we look at shoe, that's holding up. Sainsbury's, let's look at some bellwethers. Sainsbury's is positive, looking good. Chewy took a big dive. That's a lot of volume off that low. So we are already 65 plus P off of those lows from a few days back. As seen on screen, that's like Boo just coming out of that apex to the downside. So we had a big push up on January 12th, so we look as if we can do 560 on that. Next stop. Card factories coming off of that 114. Yeah, so overall we are trying to hold support on these markets. Let's look at commodities. Mentis has a good run into the 130, that's pulling back. I think commodities is still viable. I think this 120, 122 is still viable. Man Group. Anything commodity related? No, I like Man Group a lot. This is going to be my chart of the week, I think. We're closed above this support here on Friday 5th. If we can break up here, we can get above 220, 230. I think that can get back up to those highs. I think that's a 3-wave corrective wave down to that support. And miners. Pan African falling back into that huge 2-3 days. Any move into 19 I think is viable. Sentiment. A huge volume came in on that Wednesday, 2nd, 3rd. I think any pullback. If you see 103, 105, I think that's viable. Purely on volume. Griffin. That's already going. Let's look at some US ones. CDE, silver miner. Looking alright. HL, gold, US gold miner. Holding up. Rio. Let's have a look at Rio. Decent buy signal on Friday. I'm very interested in Rio. I think that's a very significant buy signal to me. If we see 49, that's buyable. I would expect that to climb back up to these recent highs. I'm liking that one, FXPO. I think this is a copper miner, isn't it? I think. I'll double check that. Huge move up here, November 22. I think we're going to retrace back up to those highs. You can see the channel down there. If we can poke above this area here, start closing above 110, I think that can go back to £182 potentially. Just manage your risk. So very much liking anything commodity related. Let's look at wheat again. You've got to say that's speculative, but if we fall back into 620, I'm going to buy the stop underneath that low, $6.05 low. Okay, so very much liking the basic materials and the commodity related stocks. Some of the financials look good with these rate rises and higher rates overall. Miners doing well on the back of this commodity rise. Let's just have a look at the healthcare sector. Bristol Myers. Yeah, I like Bristol Myers a lot. I've been in and out of this a lot. If we can... Bristol Myers can close above this recent trendline resistance. We pop out of that. That's a really great breakout pattern. And we break above 70. I can see that going up to 90 plus. Medtronic is already pushing up. AstraZeneca holding up. What else have I got? Okay, I'll leave it there. But very cautious overall, particularly for the timing of the year. Sell in May and go away could well be underway, but there are some strong sectors out there. The miners, commodities and healthcare are all good sectors. With that Nasdaq weakening off, just be wary of the tech sector. Hope that helps. I will update you as the week unfolds. Thanks, bye.